Good morning, everybody. Oh, wait a minute. Did he just speak right now? Semiconductors. Morning, Mike. Can y'all tell me if you hear me okay? If you see everything okay? Just want to make sure everything technically is working. Apparently Trump just spoke, so I didn't really see anything about it. It doesn't really matter, but it's always good to know when he's going to speak, because when he speaks, the market moves. So, yeah, whatever. So, yeah, there's news at 7 o'clock. I guess there was a speech at 5, which I wasn't aware of. It didn't show earlier when I looked at it, at the news. But, yeah, so let's just get a feel for what we got going on this morning. Yeah, from Sunday, price has pretty much done exactly what I wanted it to do, but it blew through the fair value gap that I was watching a little too much. Okay, so this fair value gap in here, if it was going to continue to be bearish, and it was going to be reliably bearish off of the heels of this huge displacement, and the overall sentiment was going to change, it should have been able to hold through this. Right? It should have been able to hit this, not break through the midpoint, because you see the low over here. You drag that out, let alone, just the overall delivery higher to lower, this overlapping fair value gap phenomenon, right? Because it got outside of this, we're going to have to see it break down through this 8-hour fair value gap again and get below the midpoint in order for us to think any reliable shorts are going to be worthwhile. Because if this continues, right, the line in the sand for, this to hold going bullish is going to be the middle portion of this 8-hour fair value gap. Because this overlapped like this, because it swept liquidity, it did kind of leave equal lows down there. So again, we'll have to just see what's going to happen throughout this the rest of this week and today, obviously. But there's been a massive run higher. We started Sunday talking about the start of the week if it's going to go lower, it should rally up first for power 3, and it has in fact done that. Now, whether it's going to hold here at this 30-minute breaker, there's a daily, I believe, volume imbalance in there, not fair value gap. Yeah, it's a volume imbalance. Let me fix that. Right, so again, we have a 30-minute breaker, right? This is a down candle in here, right there. But you could technically use the high to the low, like the whole entire thing, because once you move up, you see it's a whole candle, right? So if price stays below this, that's obviously going to be something trustworthy for us to try to seek shorts. But then at the same time, because that 8-hour fair value gap was traded through so aggressively, we're going to have to monitor this as a potential balanced price range to go higher, And if that stays intact and we just keep pushing, this is a market maker buy model that should, eventually set up something maybe up in these levels up here, right? And then we could try to catch a second stage distribution to the buy side if that does show to be what's favored this morning. Okay, but again, this huge decline in here, right? You got to keep in mind that this could be a transition. At least up until this weekly fair value gap is attacked. It doesn't really look like it's too interested in doing that from this perspective, though. Right? It looks like it dropped, swept out the low here. It did leave equal lows. So again, there's still a chance for that to happen if it rejects up here and starts to get down and through this 8-hour fair value gap. Okay, so if it does that, then that supports the shorts going even deeper, aiming for the weekly fair value gap, like I mentioned on Sunday. And I've been mentioning this weekly fair value gap for a couple weeks, right? Just in case we had a offloading of buy positions using the COT that we talked about, and we in fact did. But given this strong reaction right back up to a premium, we're going to need more displacement to continue to trust it, especially if DXY is going to, like I say, if it declines, this will probably end up continuing to go higher, right? And then this would be a market maker sell model. But if this market maker sell model fails and goes higher, that would support this bearish breaker, trading to the downside, and then again supporting the weekly fair value gap. And then of course this would end up going higher as a result. So we're kind of in a stage of waiting a little bit, right? It isn't a premium, so ideally if we were going to look to short, we're at a premium, right? But given the fact that there is still a higher time frame structure that doesn't look like it's been overwhelmingly like broken, right? It just looks like it retraced. If you take some of this off real quick, if we go to some of the other indices, right? If we flip through them, right? There's a small lower low here relative to this weekly low. And if we go to the Dow, we have a clear SMT that's bullish. And we got relative equal highs up here too. Okay? So, we're going to have to monitor that. Okay? And if we move up to the Nasdaq real quick, go to the 1 hour. Go from this high to this low. Price is basically consolidating around equilibrium, which is absolutely something that we expect when we're hanging around equilibrium on a higher time frame. Okay, so again, we need to see some type of displacement, whether that's to continue the buy side, or if it's going to break down and then further support the fact that the weekly fair value gap is in fact going to be targeted. So yeah, it's some of the different elements that we have in front of us right now, and there's no news until 7 o'clock a.m. Pacific Standard Time, which is in 45 minutes. So we'll see what happens, right? We're going to let the open, like 6:30 open, give us some manipulation and show us kind of what the vibe's going to be. We're going to observe, power 3, obviously, just open price. We're kind of navigating above that. So ideally, if we're going to be bearish, this is a good indication for, oh wait, whoops. Let me go get the open price is right there. And again, we're at equilibrium, right? So we're above the open price. That's what this little box is. Okay, I'm gonna actually remove this. Hopefully you guys can just understand that we're at equilibrium right now, and we need to break out in some form or fashion. But if we are going to be bearish, right? Say DXY rallies and this hovering above the open price, which is right here from overnight. If it breaks down and then starts to really attack these levels in here, for me personally, again, if I'm going to support like price really diving towards that weekly fair value gap, we're going to really need to push back through this 8-hour fair value gap. Okay, because otherwise this should be able to hold, basically giving this the market maker buy model scenario, and this should be a balanced price range down here. And then as price marches higher, it's going to be leaving areas that it's not going to have to come back to in terms of balanced price ranges. Because when a market maker buy model forms and completes, or even gets close to completing, in this case if it's a buy model, everything below where price is currently at should be able to hold price, because the whole structure of a market maker buy or sell model is creating a balanced price range, right? It's going lower to go higher or higher to go lower, right? I can say though that if this breaker here holds and we do in fact push through this 8-hour fair value gap, my opinion will then switch to market maker sell model, identifying this as a manipulation for the weekly range, getting us this 1 accumulation, 2 accumulations, and then a possible smart money reversal in here. And then, maybe I'll make a decision somewhere deeper into the 8-hour fair value gap if we get down there, right? Otherwise, what we see here, it's promoting us to wait, right? We got to wait. Let's let the 6:30 happen. Let's let the first 20 to 30 minutes play out within the opening range, okay? And let's see where a regular trading hours gap is. So we got a regular trading hours gap down below, which if we get a breakdown to the sell side and a rally in the DXY, that could be another piece to the context of us looking for that weekly fair value gap getting targeted, but this could be an earlier target, right? And then, of course, like I said, the market maker sell model may kick in too. But for now, that's not of interest yet. We need some more stuff to happen, right? It's going to have to fully give us a little bit more context, right? Because this is a very strong decline with a huge retracement, larger than I expected, but it's what I expected price to do at the start of the week. If you go back and watch the video, if you didn't, from Sunday, you'll see clearly that I mentioned this explicitly, that it needs to go higher first. Then how it delivers in this 8-hour fair value gap, we'll see kind of what it wants to do after it fulfills that. And now, we see that 8-hour fair value gap was completely traded through. We have the regular trading hours gap from Monday down below, right? So that's a target for the downtrend if it does continue. What confirms that it's going to continue to be a downtrend? Well, the power of 3 scenario, if it can operate above and then displace below the open price and then show resistance to, like levels like this, or just continue to support this 30-minute bearish breaker. This is also a large wick in here. So if you go, let me see where I put that at. So yeah, it's the 1-hour wick. So we also have another line in the sand as well for this to hold. It's still potentially valid if it wants to short, as long as it stays below this wick here and this breaker. Once we get outside that breaker, we have no more reasons to hold on to the idea that price is going to go lower, at least for now. Okay, but if it holds these levels and starts to displace lower, then that'll be something worthwhile potentially to the downside. Okay, but if it breaks it, again, that puts our position in line with the overall higher time frame that's still bullish structurally. There's no change in what the narrative is currently. Shorts right now would be counter trend until something like this 8-hour fair value gap is completely traded through. And then if it does trade through that, it'll set us up with a move to catch this as an inversion. And then we could ride that price swing all the way down below these equal lows first. But even before that, we have that regular trading hours gap that could be targeted prior to these two. But then once it gets down below this, it can, possibly support us getting down to this weekly fair value gap, right? So those are some of the scenarios I'm thinking about. Some of the stuff I'll keep in mind as we look to see price get out of this range it's been involved in overnight. Okay, so it's just been accumulating buy side and sell side at equilibrium from that larger swing off the displacement here. So this high to that low, we're right at equilibrium. Okay, so again, if it is going to short, right, great, we're in a premium now, right? But we need to see a little bit further evidence. We don't pick tops even in this scenario, and we don't pick bottoms. So we're going to need further context, like breaking through this fair value gap, breaking through this and using it as resistance, showing little to no support in price, like bouncing from here to go higher. Those are things that we want to keep our attention on as we allow price to print for the first 30 minutes of the opening range. Okay. Do you guys have any questions about what the perspective is? We got 9 minutes until the open, so if you got questions, definitely fire off. If not, we'll just continue to monitor and see what price wants to offer. And I'm sure we'll find something. So yeah. We also got this order block in here too on the 1 hour. So let's see what happens here. We got equal lows here. Right? I wouldn't be surprised if it does still want to go higher. I wouldn't be surprised if it does want to come down here first, sweep this up, then displace. Even before it breaks through these levels, right? Or like this breaker level up here. We could still use this, right? If price gets above and leaves this low, and then just, continues to hold in this level, we also have this. We also have a daily volume imbalance, right? So we're just going to let price tell us what it wants to do, right? But regardless of what it wants to do, we're ready for either scenario that takes place. We just have to wait because we're at equilibrium, and price still on that weekly chart has not turned off the interest to go higher. Because again, narrative doesn't change. I posted a post on my Instagram from the video that we did on Sunday, and it's talking about how narrative doesn't change on the higher time frame like it does on a day-to-day basis for like counter trend moves and just intraday price delivery. Higher time frame changes in state of delivery or changes in sentiment are like turning a large ship, like a cruise ship. Okay, it takes like a long time for them to whip around in a big ship. Well, the higher time frame is that big ship. Okay, everything else is within that big ship. Okay, so in order for everything to change overall, the higher time frame must change. And in order for the higher time frame to change directions overall, it needs 3 PD arrays violated on those higher time frames, and it needs to really commit to the fact that it's changing by breaking liquidity, breaking highs or lows, depending on what direction it's going in and then reversing from. So that hasn't changed, right? In this case, it's bullish still, right? It just looks like there may start to be a transition from bullish to bearish, right? But we'll have to confirm that with further evidence. What evidence do we need? Well, in this case, the levels I mentioned getting violated would be enough for me to start thinking about a change. Okay, so yeah, hope that's clear. Hopefully the scenarios that we're trying to observe right now make sense. And again, I would not be surprised if it takes out this low. Mind you, this is London's low. I don't even got to pull up the indicator to identify that that's London's low. And ironically, London's low is coupled with equal lows. So again, is this going to be used as the pairing liquidity for a power 3 to go higher and then target London's high, and then maybe even some of these other highs, right? Or is it going to just violate that, use these up candles here as a bearish order block, give us a commitment to breaking through this 8-hour fair value gap, which would then put us in line with targeting the sell side here, the regular trading hours gap, and then eventually, if it's excited enough, get us down to the weekly fair value gap. Okay, yo, what's up, Joan? Welcome, everybody. Good morning to you guys as well. Yeah, there was no news yesterday, but there's news today. Okay, so we are going to wait for the news. We're going to wait for the open. We're not in a rush. I'm never in a rush. If you want to be in a rush, you're going to be frustrated. Being in a rush blows your account. So we are going to wait for price to speak. We let price tell us what it wants to do and go off of that. And we don't go off of what we want price to do. Right? We have to go off what price is telling us it wants to do. And hopefully you guys have been catching on to that process. Okay. So let's move up in time frame. Let's go see if there's something we can view. Again, we got this wick in here. It's also a 30-minute breaker, like I said. So if that holds and it starts to break down, turning this to an inversion, and we start getting down below here, then we can commit to the fact that price is going to go lower. Okay. Otherwise, it's going to continue to go higher. Okay. So we're going to, again, wait because we're at equilibrium, and we're going to want to see what that's going to present us with when we go beyond the open, which is in 3 minutes. Is it going to take out London's low, and then what the news is going to bring us? And then by that time, we'll be able to have more of a certainty in terms of what price is going to want to do. But for now, again, we're going to wait, and we're going to be patient. All right. And again, if you guys got any questions, let me know. I'll get to it when I can, given the fact that it's already about to be 6:30 of the open. Yeah, so this is London's low, like I said. Make sure, okay. So yeah, DXY is definitely looking like it wants to target its London's low. It also has a London low here. If we go up to the DXY, you can see that it wicked above part of my line in the sand, right? So we've been observing this weekly bullish order block. Is it going to hold there? It still has a little ways to go before it gets there. And we haven't quite got to that point. If you remember from Sunday, I was thinking like, okay, we're going to open up and probably target this and then see if it wants to use that to go higher or if it's going to violate that and go lower, which would give us a certainty behind whether this is just a stop hunt to go lower or if it's a break, right? Ready to continue to rally up, supported by this order block holding in price. I mean, if it can't even get down into that and it just starts raging, I mean, that's really bullish for the DXY. And that would end up being bearish for the indices. All right, so we're in a phase where we got to just watch. We're still right at the beginning of the month. Still the first start of the first week of the month. So that's generally manipulation, consolidation, and a more shaky environment, which is why we're waiting. And, you know, we kind of got to make an argument to be flexible, you know. Still trusting that the narrative is still bullish. Nothing has changed, like I said, but we got to let price speak and tell us what it wants to do within the context of the monthly power of 3, right? And it's going to be 4 weekly power of 3s within that. And right now we're at the start of it, just like on the day when the day first starts for the daily range. There's manipulation, you know, so you got to let it play out. So it's similar to what we're doing here, but on a larger scale for the monthly range. You know, just trying to observe what it's going to do here. Okay, so we got 1, 2, 3 drive pattern in here, right? So 3 drives up into that buy side liquidity, 1, 2, 3. And it wouldn't be a shocker if we try to target London's low. Like I said. Then how it delivers within London's low, that's going to be something very important to watch. We got this volume imbalance too. It's not unreasonable for it to bounce back and forth through a volume imbalance. Let's go look at the other indices. We got relative equal highs up here for the S&P. That's pretty obvious. Daily fair value gap for that too. But yeah, again, you got to think power 3, right? So if this is going to be a bearish week, again, if we get displacement, this turns into a market maker sell model, right? But if it drops lower and fails to deliver that and then displaces higher, that further confirms that we are set to still target buy side in line with the higher time frame narrative. If this breaks down and delivers this or starts to show this wants to be a market maker sell model, then again, that's just going to further provide evidence that we may start to see a transition from that narrative turning. Remember, it's a big ship, right? So it takes time to get away from a higher time frame narrative. You don't want to be a flip-flopper. You don't want to be someone that goes in and, you know, has like flips every 5 seconds because the 1 hour or 5 minute is doing something. You want to support whatever you're trying to do with that higher time frame. Okay, so now the S&P dug lower. The Dow's rallying up, so we got a cracking correlation. We have actually an SMT here now below London's low. So again, like I said, we want to see how this is going to behave in here. Yeah, this has been a pretty exaggerated run to try to get below there. Currencies have taken a pretty strong dive. You could see the quarterly shift from bullish to bearish. And again, we're just going to have to be patient. Yeah, it's a pretty strong move right there. If you go to the 1 minute, we could see this here was a market maker sell model to get down below London's low. Basically a smaller scale view within that larger perspective we've been trying to outline. Right, so yeah, let's see what happens in here. Let's move up and see if there's any. There's this fair value gap in here. It looks kind of interesting. Again, we spent a lot of time up here, but we're still in consolidation. Seems like it may be starting to get an impulse, but again, we're right at the 630. We got to let it play out a little bit. One of my rules is I don't take a trade within the first 30 minutes generally, unless something very obvious is showing me that it wants to do something. And even when it does that, I let that play out so I can get the timing correct within a macro. Look at that huge wick right here. That's a really strong wick response. Tells me that this is, more than likely to be a manipulation sweep or a raid of liquidity here. Right, so yeah, if this continues and we get, I'd say, above this, and then outside of this daily volume imbalance again, it'll probably use it as support to then target that higher time frame wick we were just talking about, and then beyond, pushing into the daily, the 30-minute breaker, right? But for now, again, we got to watch what's happening. Okay, we're in a state of monitoring. We're not in a state of trying to demand an entry. Again, we're too close to the open. For me, that's just the way it is. If you don't like that and you want to do what you want to do, that's totally fine. But this, I'm here to share my view and how I operate within price and how it can help you. Okay, so we got this fair value gap in here, so that's going to be very important too. Okay, so here, let me actually, I'll make it a box. Okay, so yeah, in my opinion, that's a pretty strong reaction, right? So it may not be fully done, trying to purge a little bit more of the lows. So we'll see how excited it wants to be. So yeah, I can say that if this was to react from this to go higher, right? If it like, say, did this and then traded back through it, that would be an inversion fair value gap that would then turn into reversal to go higher and continue what we've been talking about in terms of the buy side. So yeah, let's see this reaction in here. Okay, I can say that if it uses this, displaces below this, we may be set to try to go a little bit deeper. We have a new week opening gap over here. So if that was to happen, shorts would be reasonable to potentially observe or participate in at low risk because there's news at 7 o'clock. Okay, so you have to cut your risk. If it breaks above this, same thing, right? Be half risk because we're so early in the session, so close to the open. But if you use that as an inversion, that would then set the stage for us to then target the buy side. Okay, so right now it's holding for the short, right? So we're just kind of identifying the story that's going on in here. Okay, and again, I'm not interested personally in taking any execution right now. I encourage you to be an independent thinker. But for me right now, given the news is at 7, very low amount of news this week, I'm going to personally wait and follow my rules. So yeah, look at that reaction. If this continues, again, it's going to continue to support downside. Buys are not of interest at the moment. Higher time frame narrative, we can't forget, it's still bullish. So if we do get displacement above this high, but first and foremost above this fair value gap, that'll start to confirm the price is now trying to transition. Right? We got a high, low, high, and a failure swing here. So if we break this high and get above this fair value gap, that is a type 2 dealing range on this 1-minute chart within the narrative that's still bullish on the higher time frame for this asset. And then again, that would set the stage for us to then try to seek these levels getting purged, and then eventually even maybe this high and then beyond. And if DXY collapses as a result, while that's taking place, then that's something that helps support getting in line with the buys. But if this continues here and leaves this high available, that'll be an intermediate term high, right? And it should be able to hold and continue to push price lower. So yeah, we're watching this high. We're watching the behavior in here. Okay, now it's starting to be a lot less interesting for this fair value gap to hold for a short. So we've broken above that, right? Now we have this fair value gap to watch as an inversion. Only way that shorts would kick back in line is if it breaks back down below this fair value gap. Otherwise, this is indicating that, you know, we're potentially looking to blow these out. And London's low being swept at this moment looks like it was just a simple purge. Okay, so type 2 dealing range took this high, and so it should have not really much issue getting above this high, right? And again, the line in the sand is the low of this fair value gap. That would turn off any interest to buy, at least for the moment. All right, but again, for me, we're too close to the open, so this is observation, right? We're just observing. You know, if it takes off, so be it. We'll find something later, okay? At least I will. Okay, it's up to you to do what you will with your money. You know, I'm not here to take responsibility for your actions, okay? I'm just giving you insights. Okay, so yeah, notice how when I said these would get taken out, it should send us up here with little to no problem, and that manifested real time, per usual. And this is obviously taking out London's low, like I said, as a sweep or a raid on liquidity, and now it's ripping people's face off who are chasing the short. So now this high to this low, we should be able to see this as a potential balanced price range in here, right? And again, the line in the sand still remains to be this fair value gap, which is also a rolling balanced price range inside of this larger potential BPR, right? So again, the mid portion of this and the low of the fair value gap there is what would turn off buys if it was to be taken out. And then this low to that high, if it breaks down below this low here, turns this into a bearish breaker. And then, you know, if price was to do that and then trade back into it, that would be an opportunity to target a little bit further sell side. By the way, if you guys get value from the content, don't forget to like the video, subscribe to the channel if you haven't already. Again, we do this every single week. My goal is obviously to help you guys succeed. I think I've done a pretty good job this past year. I've had a lot of people hitting me up with their experiences, and I'm grateful to know that I'm getting the message across in the way that I intended this year. So, and again, if you're new, welcome. Again, we do this every week, so I can pretty much guarantee that if you spend time here, I can't guarantee you profitability, but I can guarantee you that I can get you closer to clarity, if not fully to clarity, so then you can be profitable on your own, you know, which should be the goal, you know, because I can't take trades for you, you know, and you shouldn't want that. You should want to be independent. Okay, so yeah, watch this here, right? This is a fair value gap, the one that I highlighted from earlier. I said if it gets above that, that's going to be an important level. Notice how it is important right now. Okay. So yeah, look, it's looking pretty convincing. Again, we're just a little too close to the open for me to really want to try to participate. The earliest I will look to participate is at 6:50. So 9 minutes from now within the macro, or 5 minutes before the macro. I have no problem trying to see something 5 minutes before, just to get us within this like a setup, and then use the macro timing and spooling characteristics to then push us into where we're looking to target. So yeah, again, we got London's high up here. London's low was taken. Now London's high is now potentially in the crosshairs. London low, where the hell is London's high? There it is. So yeah, let's see what happens here. Remember, this high to that low, this is not only a balanced price range, but it's also an order block. Order blocks, breakers, a lot of the different PD arrays are bringing you to something very similar, which is a balanced price range. Just different variations, like this overlapping fair value gap phenomenon. That's a rolling balanced price range. That's what I call it. And then, of course, the larger view that overlaps those smaller rolling balanced price ranges within price action the larger view is also a balanced price range. So it gives you really obvious, clear, visual representations of invalidation, whether you're on this time frame or on the higher time frame, daily, weekly, monthly. The same things apply. The same way of conceptually, the conceptual application is the same. It's the same things that we do here on the higher time frame. They're just a higher time frame. So you see these levels holding, so shorts are not of interest. The only interest right now, given what we've seen, is this taking out the low. Higher time frame bias or higher time frame narrative is still bullish, and these lower time frame pieces of price action are supporting something like the London high getting taken. Because you got to think, they've taken liquidity out here, so who's in? Who got triggered in? Sell side, people that thought this was going to turn to resistance, support turned to resistance, and we're below the open price. So we're potentially at the low of the day here, right, when it was down there. But now we're getting back above it and still dancing around the higher time frame equilibrium we talked about. So again, that's why I'm waiting. That's why I'm, letting price present us with something, right? This looks pretty convincing for the moment. The price is, at least for now, showing interest that it wants to continue to push higher. As long as these levels hold in price, that'll continue to be supported, right? And if it gets violated through these levels, then again, we have potential bias to then target the downside as price is printing. Again, all of this is working within that higher time frame chart, right? The higher time frame narrative, right? This is a retracement. If we go to the weekly chart, we have an SMT at the low supporting buys. So, if that's going to continue to hold, that supports price going higher. Okay? And we start to see early signs of transition if some of the levels that I mentioned on this lower time frame start to get violated. Okay, but for now, that hasn't happened. So what's happening? That weekly SMT and potential weekly bullishness is still intact, right? Especially if DXY does decline from where it's at here. It'll just continue to confirm that price is going higher, which is the case right now. Okay, so again, you'll do what you will with that information. We wait for news. Yeah, Mike. We're waiting for the news. I'm waiting for the news. The news and then this macro. Notice how it's 5 minutes before the macro starts. Notice how right when that candle opened, 5 minutes before, it's already starting to move. Right, like I said, positioning 5 minutes before our macros, there's nothing wrong with that, as long as you know what the hell's going on and where price is reaching for. For now, the target is up here. Initial target was London's low, right? As it was declining, I mentioned London's low. Okay, and the London low is taken. I said if we get above these levels, right, we'll continue to try to go higher and possibly target London's high. And that's in fact happening yet again, right? Yet again, we're in sync with what's going on. We just have to wait a little bit for timing, because time then price is the order in which we got to observe things, right? Time being macros, kill zones, open prices, different things like that. And then prices, PD arrays, and liquidity. Very simple. But you can't think about PD arrays being important unless time is also there, coupled with it. That's what makes the PD arrays delivery dynamic, right? Or just in general, the dynamic delivery comes from timing within those PD arrays as they converge, okay? Time and price. But yeah, it's pretty beautiful run in here, right? So I give an opportunity. Once we got up here, I did mention that it'll probably go up. And if you're an independent thinker and, you're okay with taking an execution early before the open, maybe you would have got in here, right? I didn't say anything was going to stop the buy unless it broke through, right? So I hope that was obvious enough for you guys to catch on, because again, I'm not going to come in here and say, oh, you're going to buy here, stop goes. I'm not going to do that. That's not what I do. Okay. And I get a lot of students succeeding even with me keeping it that way. And honestly, I think more students succeed because of that way of teaching. Okay. Because it forces you to be an independent thinker, But yeah, this is beautifully working out here. So let's move up in time frame a little bit to see if there's more PD arrays that can allow for support. So we got this fair value gap in here. Right, so as long as it stays above this level, this high to that low, this actually created a bullish breaker here, right? This high going up, drop down, sweep liquidity, got above it. So it can still return down into that and then go. I don't think it's going to break through this fair value gap in here though before it gets up to the high. This whole run lower to higher, that is a market maker buy model, like I mentioned, could be the case, right? Lower to go higher. Accumulation in here. If it does one more retracement, it may do one more, but given what we see here, it doesn't seem like it. It seems like it's just going to rampage through it. Yeah, what's up, Byron? My freaking brother. What's up, bro? What's up, playa? But yeah, see, the higher time frame narrative still bullish. A lot of people were probably trying to force shorts, right? I laid out an argument showing why we still have the ability to hold on to price continuing to go higher. And then as price printed, right, we still looked to position, at least our mindset in terms of, London high being taken, more buy side being targeted. Off the heels of this manipulation below the open, which took London's low, triggered in the opposing liquidity, shifted market structure, broke through these levels, which I said should hold. Okay, they should hold price, and unless it broke through that, buys would still be valid, right? And then 5 minutes before the macro, 6:45, price ended up delivering right as I said. I'm waiting for the 5 minutes before, right? And then just bang. Right now we're tracing back into that fair value gap I just highlighted. So let's see what happens in here. So we got the same invalidation levels are in place right now. As long as this lower piece of price delivery holds, we'll still continue to see price going higher. And we're also at this point above the higher time frame equilibrium I was mentioning. So yeah, well, good job, Tyler. My little brother caught 30 points. Byron, hopefully you caught 30 points too. But yeah, let's see what happens. We're now in the 650 macro completely. Let's go kind of scroll through real quick, see what's happening. We got cracking correlation between the indices, so low probability environment given the cracking correlation. All right. And then we're still inside that range, right? It's an indecision candle you could see here. Right, so it's still consolidated. Right, we do have this bullish order block here. So let's see if it's going to stay above that. We got 1, 2, 3 drives pattern. So if DXY was to accelerate and we were to break down below this low, this 1, 2, 3 drives breaking down below this swing low over here, that starts to support the price is going to dig lower. Again, that's contingency plans for right now. Given what we see, there's no reason to try to support downside delivery at the moment. Now, if we start breaking through these levels like this low and these levels I mentioned, then you're going to have to adjust, because our 3 PDA rule, in terms of validation, would then be turning on to support the downtrend, right? So it would invalidate the buy side. But yeah, I see we still got that London high available. Look at DXY accelerating now. So that's not overwhelmingly exciting for us to see this continue. It still might, with the cracking correlation overall. But again, we're not holding on to the bullishness too aggressively. So if our levels start to get broken that support downside or support the fact that, it should hold to then go higher, if it slams through those levels, then we have no issue with being flexible and adjusting to our secondary plans, which were to then target down here. Primary plan was to see if this can continue to go higher, which it has so far. But again, if we have to adjust, there's nothing wrong with that. As a trader, you need to get used to that. You gotta have a process that allows you to switch over and be flexible when necessary. Doesn't mean you put a buy and sell markup, because that's just guessing. We're not guessing. We're playing out different scenarios, supporting one, which, like I said, was the buy side was the primary favored objective, unless, of course, it breaks down through these levels that invalidate the buys, right? In which, if that was the case, then we would then switch, because it's a contingency plan. Just like in war, you have to have primary plan, and then if it doesn't go right, you have to have a secondary plan so you can adjust. This is war, okay? So, we operate in a very similar fashion, so that's why the last 7 going on 8 months, we've been absolutely insane with the accuracy with how price, or with what price is trying to do day to day, week to week, month to month. So yeah, none of this is supporting the fact that price is going to go lower here. DXY is rallying, yes, but this is not supportive of invalidating the buy position yet. We're going to have to get, this happening, right, and then fail to break the high, and then displace through these levels, turning like this into an inversion, using this as a possible inversion to go lower, and then breaking through these levels in here, and then in that case, of course, we could target down here. And again, if we move up in time frame, we'll see this down candle in here. If we break this low, that can be turned around as a bearish breaker if we do continue to hold on to this price delivery, and it does get down to there, right? Otherwise, again, this is just going to continue. Nothing's invalidated the run higher, right? It's doing exactly what we thought it would do when it got above here, and our target is London's high, as we painted from when price was down here. So yeah, unless that turns off, there's even with DXY doing this, it's cracked in correlation. So, it is what it is. It's a little more risky because if DXY is rampaging higher, the correlation can kick in at any moment, and then this can just drop, right? So that's the risk you take when you're trading against correlation, when it's cracked in correlation between the assets that are supposed to be reverse correlated, right? But yeah, so high, low, failure swing. If this continues and it breaks down below this, that would start to give us an early sign that we may target the low down there. Otherwise, if this continues to hold, getting above this would create a bullish order block. This high to that low, you take that range, drag it out, should act as a rolling balance price range, and the 50% of it should hold, right? If it was to get above that. But again, if we break down below this, that starts to give us evidence that we may be looking to transition. And then, of course, we would still hold on to observations to see if it can, try to target these levels. Or just sweep this and then continue to go higher, right? But yeah, like I said, at any moment, if DXY and the indices are moving together, at any moment, the indices can kick in line with the correlation, like you see here, right? So we'll see in the next couple minutes going into the news what it wants to do. This run is happening before the news comes out. So it's always a bit suspicious to see a move start with a news event taking place like shortly after. Because a lot of times this could be a manipulation move, and then the news comes in, then the real move kicks in, right? So that's part of the reason too why I didn't take this execution, and I've been holding off. Talking about the news, talking about letting the first 30 minutes play out, right? That's the thinking behind why that's been my decision. But again, by all means, if you took this or saw what I was talking about and took this and, you ran it up, took your 20 to 30, cool. The things I'm saying is not a discouragement for you to not do that. If you were able to do it confidently and this was your model, which it was a couple different models in here. All right, like a breaker, right? YouTube model, right? Type 2 dealing range delivery using a fair value gap, balanced price range, right? That's a model, okay? So multiple different things took place in here to get you in line with trusting this run. Yeah, so now we got 3 minutes till the news comes out, so let's see what the damage is going to be. So far, it's still been running to the buy side. DXY has definitely turned around since the start of this. So we're going to have to see. The Dow is starting to run lower. Right, it's respecting this wick. We still got this wick here for the Nasdaq too. Also for the S&P. So let's see if that's going to hold or if we're going to trade through it and then get in position with another buy, or are we going to be able to ride a swing lower if these levels end up turning on to then go lower. So yeah, let's see what happens here. Again, you guys, if you get value from the content, don't forget to like the video, subscribe to the channel if you haven't already. If you're new, we go live on Sundays as well, and we get in, preparation for the week that starts every Sunday. And this week's weekly prep call perfectly played out again. It's been 7 straight months that every Sunday call, when price opens up for the week, we've been correct in terms of what price is going to do. Don't take my word for it. Go rewatch the videos and see for yourself. It's right there. Right, so yeah, we're watching this here. Let's see how this fair value gap wants to deal with price. Let's see how. So we got the S&P pretty strong reaction. You could see a head and shoulders, right? Yes, we also got so this is a run on stops, shift in market structure here. This fair value gap, if DXY continues, this fair value gap will probably send price lower for the S&P. The Dow has definitely supported the downside, so we got the Nasdaq acting as the slow mover if it does end up being bearish. Given the other two indices, it looks like the Nasdaq will eventually kick in line. It'll just really highlight what I mentioned about a delivery taking place prior to a news event that comes out shortly after. If it displaces to the downside as a result of the news and DXY continues, that's going to be a beautiful example of why you got to be very cautious when a move takes place so early to the open with a news coming out relatively soon. Look at that. See why I hesitated to try to take a buy? See why I waited for the news to come out? It happened so quick, a gap lower. Holy crap. Look at the DXY too. Sheesh. It's crazy. But yeah, for sure, if you took an execution and got greedy and didn't listen to what I said about 20 to 30 points, this is a good example of, yet again, 20 to 30 points allowing you to be profitable. Trying to force more in this certain condition would have then resulted in you taking a loss or getting stopped out at break even, or wherever your stop was. So yeah, this is a huge run lower below this low. So let's see what this is going to be used for. Is it going to wick through it and go higher and then send the indices lower, or is this going to push the DXY lower and then see us get above this swing high? If we get above this swing high again and the indices here, I would then look to continue to support buy side delivery and look to position some type of bullishness. But if we continue to keep this intact and DXY rallies, then I will continue to look to support a downtrend, a downside move. Once we get down below this, I'll use this as a bearish breaker, right? Low, high, lower, low. If we go to like the upper time frame, we could see here, low, high, lower, low. If we get below this, I'll try to look for my model retrading back into this down candle on that 30-second chart. Yeah, DXY, look at that. It's got relative equal highs here. Currencies are still kind of a mess. They're not really doing much. Same thing with the fair value gap. It looks like this is a potential balanced price range idea if it is going to be supporting price going higher. If it breaks through this, then again, we got a weekly fair value gap on the euro too, and a monthly fair value gap on the GBP and a previous month's low. And so we'll see what happens. We got, what the hell? Yeah, it's pretty nasty in here. Nasty gap in there. I wouldn't be surprised if they try to fill it in. And we got a little tiny regular trading hours gap. I didn't even notice. It's so small. Small regular trading hours gaps like this, right? That are, you know, less than 50 to 80 points. That's also a low probability signal as well. ICT's mentioned that a couple times. You guys probably remember if you've been diligent. Just watching some of his stuff from the last 2 years. So yeah, nothing too overwhelmingly exciting for now as a result of this news. It definitely gapped. We definitely got a pretty strong movement lower here. Swept out lows on the DXY. Does seem like the other indices are more interested in going lower. The Nasdaq is still in a range. It's just purged out the low down there. So the two targets that we had identified ahead of time, like overall, were the London's low and London's high. London's high got left, right? It hasn't swiped it, right? Maybe that happens later, or maybe it doesn't at all and it ends up tanking, right? The more time we spend down here, like inside these levels, with DXY going higher, the more likely it is to break these lower levels, the rolling balance price range and the overall balance price range from this high to that low, right? And then this would turn into a reversal, right? Which it looks like that's going to be the case unless it breaks back above these highs up here, gets back through this gap. So yeah, it looks like it is going to continue here. There's nothing in here to really think about participating in. You know, ask yourself, is your model in here anywhere? Or do you just assume that it's going to go lower or assume that it's going to go higher? You can never just assume. It has to be in the chart, you know. But yeah, this is making me pretty confident given that we're closing below these levels that it's going to, in fact, try to dig deeper. Then the DXY here has this large gap. Let's move up a little bit and see. So yeah, it's just a huge wick in there. Still staying above this. Wicks do the damage. So yeah, at this moment, I'm more interested in trying to possibly frame out something to decline a little further. Right, there's nothing for me to engage just yet, unless it gets down below this low. If it does get down below that, somewhere in here, if I find my model showing on the 30-second chart, or if I wanted to be aggressive and see this purge below the low and toss a low-risk entry in there, right, like one contract, and then just see if it can continue to go, then add later, I can do that. You know, it's a possible scenario I might consider. But in terms of like any other models, you know, nothing really is being presented here. You know, this was a displacement. It was a kind of displacement that I don't really want to see, which is just the gap, right? But all the downside delivery potential is being supported by the other two indices as well. It was doing it before the Nasdaq even started showing any interest to go lower. Yeah, Mike, you're absolutely right. It's kind of, you know, teeter-tottering. Yeah, let the people that are going to blow their accounts blow their accounts. We're here waiting. We're doing what we always do, which for 7 months has been amazing. Live. Not just because I say it. But yeah, we got this swing high in here. Let's see. DXY is very jerky today. You know, very much trying to target both sides. I mean, it just looks disgusting. Look at it. It's been a whole consolidation since yesterday, pretty much. So Yeah, and then we're still inside of a range in here, right? If you take the extreme, the low to the high up here, we're at equilibrium for this range, let alone the 1 hour 1 hour equilibrium range that we identified right from this high to that low. It's both at equilibrium on the higher time frame, and when we go down to the 1 minute, it's at the equilibrium point from the extreme high that's created overall from today's price delivery to where we're at now. So yeah, let's see what it wants to do here. Let's go to 30 seconds, see what's happening. We got a fair value gap in here. Let's watch that. Order block, let's watch that. Oops. Yeah, we're definitely working back and forth with this open price. We're now above it. If it's going to tank, it'll probably do it very, very soon within this macro before it closes. We did a lot of work above, and now we got finally back below. DXY is kind of just, all over the place. But again, it does look like there's a chance for us to blow this out down there. See, now you see how we're below the levels I said I wanted to watch, hold if we were going to continue going higher. All right, it's having a hard time getting through it, right? Both the overlapping fair value gap in here, and then the high to the low here that delivered the run close to the London's high. And so let's see what happens. Yeah, let's keep our eyes on the low here. The Nasdaq is definitely the more sloppy one out of the three. It's the least interested to move out of all three of the indices. All three of them have had the other two, the Dow and the S&P, have had a very strong, pretty nice move. This here was a YouTube model in here. All right, delivered pretty aggressively. This is also a market maker sell model. Similar thing happened in this with the S&P. So yeah, we got a high, low, high, failure swing. So let's see if we get above here. Can it blow this high out? DXY is going higher here. So again, it's very, very, very risky environment to try to just throw anything at. Plus, you see how it's working this regular trading hours gap, this little small one. Notice how, remember how I said that if it's small like that, ICT has said that it's going to be a harder to trade environment. Look at the response. Is this an easy to trade environment, or would you say it's harder than a normal trending environment? Clearly, it's more difficult to try to get in if you get your model showing up at all. And for the most part, since the 6:30 or 7 o'clock news happened, there hasn't really been anything. And since 6:30, the only thing that happened was the run higher that we called ahead of time. All right, so if you didn't participate in here, there's really nothing you could have participated in at the moment, both buys or sells, if you're trading the Nasdaq. If you're trading the other two indices, there was clearly pretty nice opportunities targeting the low or the lower sell side liquidity pools. But yeah. So yeah, in terms of buys, it's not necessarily showing you any confident delivery for that. Again, it looks like it's still more interested in targeting this. So we got a high, we got a low, high, lower low. So let's see how this is treated. We also have an inversion for value gap right here. So yeah, this was one perspective to have looked at to then try to get us down into here. Then again, once price breaks down below this low to this high, once it breaks down below that, this becomes a bearish breaker to attack the sell side. And then bigger picture wise, you know, if that holds, as long as it stays above the middle portion of the candle that created the breaker, which I'm assuming was this, if I move up a little bit. Yeah, it was this candle. So as long as it was to stay below the middle portion of that, if it breaks through the low here, which it looks like it's going to, it would then continue to want to seek sell side. And we have a low here. We have the new week opening gap here. Okay, so that is something that could be in the crosshairs. Yeah, very, 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 very sloppy this morning. Other than the buy here, it's been a very sloppy delivery. This was a pretty nice scenario in here to make an argument for the sell side, which again, that's where my eyes have been since I mentioned it. So again, if something in here, you know, maybe you found something that you were comfortable with in there, you know, so be it. Right? Don't let me sway you away from that. Right? Clearly it worked out. Clearly there's logic to have identified. But again, this is very, very high resistance delivery. And I personally haven't engaged at all. You know, if I was going to engage, I should have engaged over here. You know, because now looking at price in hindsight, it's just pretty much been sloppy since the news came out. And we were waiting for the news. Remember what I said, when price delivers quickly to start the day and there's news later, the first move may be the fake move, right? Or it may come back using the news and attack what was delivered already early in the session, which you could see that has manifested. And we talked about it possibly taking place before the news came out. And this is exactly why I didn't participate. Although, you know, obviously there was something profitable that was offered, which I called ahead of time, as always. It's just, for me, one of those days where I'm just extra patient. I'm not concerned. I'm not worried about it. Just like you shouldn't be worried about it. If you've been sitting and watching and listening, hopefully you've learned a lot, you know, because you've seen multiple things get talked about prior to them taking place. And like price going higher to start the day, then the news comes out to break them, right? Like you have to see that happen to trust the concept. And you thankfully have been able to see it. But yeah, again, my attention, since price was over here, or started this move lower in here, has been the low down here. So we'll see. We'll see what happens when it blows that out. Again, that's going to basically, if it's going to continue to drop, it's going to have to stay below this this down candle. Because again, when you move up in time frame, this becomes a breaker, right? So if it's a breaker, it's going to have to respect the midpoint, right? So yeah, I'm pretty confident it's going to blow out the low here. So I want to monitor what it's going to do below this. All right, so we'll see what happens. Again, the Nasdaq has been the most nasty price delivery today among the three. And DXY has kind of got stuck inside the fair value gap. So yeah. So you guys got any questions? Yeah, Byron. only the strong survive, man. That's for sure. And only the people with strong mindsets and organized processes can have long-term success. It is what it is. So yeah, this low to that high, we should be able to stay below these consecutive down candles if this is still going to try to blow out the low using this price delivery. And this here in itself may get utilized as a potential opportunity to drop below there. All right, low, high, lower low. So yeah. hopefully everything's made sense so far, you guys. We've talked about a lot of stuff, and all of it's came to fruition, except the London high. It didn't get purged, right? But that gave us insight, you know. And then once price gave this gap and traded through and has continued to respect pushing lower, the lower objective and the opportunity that I just gave you, if you pay attention and are confident in what I tell you, that was an opportunity right there, right? I highlighted it, I pointed to it, just like I did over here. You know, this is how I give signals, okay? I'm not going to be here to cater to lazy people. You can go watch whoever else if you want to have someone trade for you. I'm making monsters. You know, ICT turned me into a monster. He's turned everyone else into monsters. And I myself, you know, within my own style of trading ICT concepts, which is obviously derived from ICT concepts, I'm also creating monsters using my personal process. So yeah, and what a beautiful delivery that was, right? So this opportunity here and this opportunity here, when we got above that, those were the two best opportunities that we handed out, right? And again, you know, you just got to be focused. You know, watch what I'm pointing to, watch what I'm saying. You know, and if you're new, maybe it takes a little bit of time to catch on. But this type of scenario, this type of stuff happens literally every week, every day, every time that I'm online. Both here and in my private group too, 6 days a week for the most part, unless there's reasons we don't go live. But even then, we're still talking about price. Yeah, what a beautiful delivery. Out of all this sloppiness, I mean, even this was a bit sloppy, right? But nonetheless, the breaker, you know, when there's a breaker available, the middle portion of the breaker delivery candle that set it up, or the string of candles that set up the initial start to the breaker, as long as the midpoint holds, you know, it's going to be dynamic. You know, if it trades too deep into the breaker, it may still work out, but it's getting less likely, and your risk needs to be cut. So yeah, this here, we got a low, high, lower low. So this candle here, drag that out. It should not be able to break past the midpoint of that. And it should continue to keep going lower if it's going to do so. And you could see that that took place too. So you see how one PD array, one model, can offer you multiple opportunities potentially. This is why ICT says you only need one model, because every single model that's taught has a continuation variation. This is a continuation variation within this price leg pushing lower, right? The initial moves were up here, right? But don't think you missed a move because it starts moving. This is why I don't care about missing a move. This is why I'm extra patient. This is why I don't care. Every time I get on, I say I'm not in a rush. I'm waiting. We're going to wait for something to happen. Even if it takes off, we'll still find something. This is a good example of why. Okay, there's multiple opportunities, right? There's multiple times a model will perform. Some operate more than others. You know, some are more frequent than others. Every single day, you can find an opportunity for the most part when you're using certain models. Breakers, the 2022 model that ICT gave on YouTube. Yeah, waiting gives you more confirmation of trend. Waiting gives you, you know, waiting forces patience. And not many people teach in a way that allows you to trust the patience. You know, because a lot of people say, okay, wait, you know, or people hear me say 1 to 2 trades a day, and they think, oh, well, I'm not going to get any opportunities. Well, no. Waiting and understanding that there's continuation variations. Me just saying that is not enough for someone to trust that, you know, they can trust the continuations, right? Like you have to see it in place, see it play out over and over and over. And every time I'm on live, you know, we do it. We point out multiple opportunities. I don't take every opportunity. Today I haven't taken a trade. You know, I could have very easily taken the buy and the sell. I gave it ahead of time, right? I pointed to it. But I want to see what continues to take place. I want to see if the narrative is going to change overall, because we're in a place in price where that could be the case, and buys can end, you know, and then we could target that weekly fair value gap. It looks like the narrative identifying the fact that price is going to target that weekly fair value gap, we still have that in the cards, especially if all this continues, right? It seems that's going to be the case, you know. So yeah, in the last couple minutes, I gave 2 opportunities that both ran well beyond 30 points. This one too. So I gave 3 opportunities today, right? From here, I talked about this has to hold and it'll probably target London's high. It didn't quite get there, but who cares? 20 to 30 points is all you need. This, I identified the breaker, right? Traded into it. It respected it and then it delivered. You know, within the last couple of minutes, I also pointed this out. I said this low, high, lower low should be able to stay below this. What happened? It came right to the center point, respected it, and delivered again. I said if it gets down below this candle, this low to that high will be the larger view bearish breaker, and that could be used as an execution, right? What happened? Within that larger swing, that larger PD array that I highlighted early in the session as a possibility, if it got below this, you know, you could see it traded into it. Not only that, it also traded into this smaller nested breaker that's inside the larger one. So what model have I used today out of the 4 models that I use? You know, I've talked about market maker models a little bit, so there's a framework, okay? But then I've talked about breakers only and inversion fair value gap here using a rolling balance price range idea that I talk about. And it's delivered beautifully, right? Multiple opportunities. So yeah. Hopefully you guys have taken this stuff and understood it, right? It's a pretty nice sell-off in there, so let's see if that's going to continue. Let's actually go look above a little bit. What's price possibly reaching for? What can you see? Right? I could see this fair value gap. It's right there on the 4-minute. Again, we still have the 8-hour too that it's going to trade into. So again, we're going to have to watch how price wants to deliver with that. This whole run is starting to look more and more like it was just a break. And then now this was a huge retracement that'll potentially set this up as a market maker sell model. Okay, and then again, depending on how it behaves, if it reaches this 8-hour fair value gap, that'll determine whether it's going to use it as support and go higher, or if it's going to slice on through it and then target the lower levels like this low, the regular trading hours gap I showed from early in the session, or it may even reach down to this level if it wants to be super excited. You know, and on the weekly chart, that just simply looks like it, you know, may just be a retracement, right? Because the overall range or the overall PD arrays have not been fully violated to promote this as a long-term downtrend, if it even reaches into here. Now, if it blows through this and starts to attack this low, then yeah, that's a different story. We may look to dig fairly strongly to the sell side. I don't think it'll, you know, overall look to do that given the landscape with the U.S. economy right now. You know, a slight retracement won't bother anybody. Won't bother me, that's for sure. Yeah, we got this order block here, also on the weekly, so we're trading within that. All right, and we're getting a pretty solid response. All right, so we'll see. We got these relative equal lows here too to watch, but then again, you know, in this lower portion, there's also the regular trading hours gap. And yeah, DXY is still a nasty mess. Looks like the Nasdaq finally picked up some speed. We got this low in here too, which is also a new week opening gap. Remember, I mentioned the new week opening gap as a possibility as well, if it was to break through this low. And it's looking like it wants to go fulfill that as well. Yeah, it's had a very shaky correlation overall, right? DXY has kind of been a nasty mess. But nonetheless, things have gravitated towards pretty much all the levels we were looking for price to reach to. Delivered from pretty much every level I said was going to be reactive and probably push price. Notice how in here I didn't really do anything. I didn't point to anything. I didn't highlight anything. I waited and waited and waited, and then it set us up. I pointed it out and delivered. Set it up, pointed it out, and then it delivered. And then way back here with this delivery, you could see that the strongest reaction was from that higher time frame view. This is the largest price swing aside from this one, right? And the quickest reaction. It was still very nasty, right? But still slowly making its way to the new week opening gap. All right. Tony, it's insane. A lot of streamers' bias was wrong, yet they got wrecked looking for Nas longs. Yep. Not us, buddy. Not us, yet again. Tony, I love when you're observing other people's live streams, you come over here and say, wow, they got wrecked and we didn't. It's like it's like multiple times, and I love it. It just shows the difference in mindset. They're on stream thinking they're demanded to take a trade and entertain people. I'm not here to entertain nobody. I'm here to keep you safe and teach you how to be lethal on your own. I point things out, obviously, and they work out, as you guys have seen. And those of you that have been here all year, or years beyond, you guys have seen, like, it's unrivaled what we do. I'm just not like everybody else shoving my $5, $10, $20,000 days in your face to get you to like me. I could care less if anyone thinks, anything about, what I make, or, keep them guessing. Just know that you could put two and two together if you have two brain cells, and I'm building monsters. Like I said, ICT turned me to a monster and many others. And, some stuff is clarified easier, in more simplistic ways, while not taking away or taking any credit from ICT. Because at the end of the day, if I didn't learn from him, I wouldn't be able to do what I'm doing, and it took me a long time to understand some of the things he teaches and make it simplistic, or at least simpler to understand. Because he even mentioned the last 2 years that he feels guilty because he made it harder for people to understand, because people would rip him off, rename his stuff, and do all this disrespectful stuff, And so he said because he felt guilty, that's why he released the 2022 model. That's why he's been making things a little bit more to the point, because he felt guilty, and there's easy ways to explain the complex things that he's taught. He just made sure that it was extra complicated, so you have to work for it more. And this channel, the way that I teach, I try to take the simplistic ways of viewing things, and then try to get it in front of you guys and show you live, so then you can apply it. And I think that's probably a reason why I get a lot of good testimonials, why there's so many students doing well after they spend time with me, because they've learned certain concepts maybe before, but it was complicated, right? Someone taught it over complex, and I don't think that way, right? Like I need things to be simple, and I want to see you guys win. I have nothing to stop me from trying to make it easy, easier, aside from me not taking trades for you, or pointing out, oh, this is my entry, this is my stop, copy me, guys. I just won't do that, because you want to be independent. You don't want to be codependent, and then eventually, you guys will get what you want, and then go on about your business, or you'll hang around and help me provide value to any other students that need help, So yeah, you guys asking questions also makes the community more valuable, because there's some people that are too shy, like they don't want to ask questions, so you guys help me answer questions for people that don't want to ask questions by you asking questions, so everyone that always asks and voices their struggles and is honest and transparent about where you're at, like Tony and many others, I appreciate it, because you help me when you do that. right? You help me help other people, which again makes this community, it's going to make this community unrivaled to anybody else, you know? But yeah. So hopefully you've been watching price and thinking that there's nothing telling you that buys are of interest. It's only shorts. Hopefully that's the main idea that you've been focused on, because nothing's changed, you know? And again, the higher time frame breaker formed. It traded into it and now it's delivered away from it, supporting the idea. So we not only have the lower time frame narrowed down, we've identified many different opportunities, like I said, but we also now have the supportive idea from that upper time frame where the breaker was, from this low to that high, down through this low. And now the target I mentioned, the new week opening gap, I said if we broke down below this, when I was talking about this being a breaker, I said if it gets below that, uses this, it'll probably send us lower to the new week opening gap. And it looks as though that's the case. So I pointed out London's low, I pointed out London's high failed. I pointed out this low when we were over here for this target, and then a new week opening gap as well. So each one of those targets I highlighted before the fact, real time, were hit, except the London's high, and we're on our way to the new week opening gap. So all morning we've had price narrowed down. You know, whether it was going to be bullish, we had a game plan for that, right? Once it failed to do so, right, we were able to then narrow down for shorts, right? We favored to start the day, not going to lie. We favored, because the higher time frame is still bullish, we tried to make an argument for price to continue to go higher because the higher time frame structure has not changed. Okay, it still hasn't changed, right? The only way it changes is if we continue to break things to the downside, you know, say from this daily, but preferably from the weekly chart. You know, the daily looks like we've shifted and it looks like it wants to target this, you know, but when you move to the weekly chart, this is simply looking like it's just a retracement, right? Right, but within that, of course, you could still build a narrative or a bias, even if the narrative continues to be bullish eventually. Now, this is a larger time frame. It takes forever. If this was the 5-minute chart, you would not think that price is overwhelmingly bearish. You would think that at a minimum, it could reach down to here. Then maybe when it gets down to there, it'll continue going higher. But if it was to break down below this or slide through this, turn it into an inversion, if this was the 5-minute, you would still think that it's probably going to dig a little lower. Well, the same thing is true when you're looking at the weekly chart or the daily or the monthly, right? The same things apply. It just takes longer to deliver. You know, so you got to figure out what it's doing from the context of that on this higher time frame. And then when you go to the lower time frame, you could paint day-to-day narratives within that context, right? And there's counter trend moves that I teach how to navigate. There's consolidations that you got to manage. Like today, we started in a consolidation, and price is now given a pretty strong decline. We're about to hit a first standard deviation. Mike said 2 micros, 30 points times 10 trading days times 20 apex accounts equals 6K. Yeah. See, and if you're like, we had a conversation like a day or two ago in my private group about funded accounts. I think was it on Monday? I think it was yesterday, or was it on YouTube? I can't remember. But we talked about it, right? And that's absolutely the mindset. If you're going to use funded accounts, you definitely want to consider stacking. You know, funded accounts can replace days at work. You know what I mean? Because if you think about how much you get paid, depending on how much you get paid, you know, think about how much you got to make in the funded account and withdraw per month. And each account can, like if you have 5 accounts, you can replace 5 days of work as long as you get one good trade that, or, you know, 2 or 3 good trades that, you know, on each account can have that amount of money that you get paid per day. You know, that's a way you can frame out replacing a job income, or at least supplementing it. That's a very safe way to do it. Instead of having one account that you're trying to replace your whole entire monthly income, you know. And at the end of the day, if you get a funded account, you're going to want to use it for something like that, right? To replace certain things or pay certain bills. But you want to definitely use that to funnel as much money as you can into a real broker account so you have full control. Because you just never know. You know, you just never know. Yeah, hopefully you guys have been learning some stuff today, and now our full targets have been met. So now the only target that didn't get met completely was the London's high that we talked about ahead of time. This did turn out to be a pretty solid move, and isn't it ironic how the largest volume of the move took place after the news, which came back and swept out all the initial run higher, using that as manipulation above the open price. And then once we got below this and used this larger breaker as a place where price delivered from, the delivery was the most dynamic. Isn't that interesting how the higher time frame delivers when or delivers better when you wait for price to get into those levels? What does that require though? That requires patience, you waiting for it to trade into a level, right? Which most people, you know, like the streamers that are live that probably blew their accounts today, they're not patient. You know, they're not willing to wait because they got people watching them and they think they're obligated to take 500 trades because Joe Schmo in some country or some city is demanding that they take an execution or complaining, right? I don't think that way. You know, I want you guys to be in the best position possible. And I feel I do a good job of putting you in the best position possible. Yeah, Tony, I can't feel bad for him either. I don't. You know, a lot of them talk shit too, you know, and they have no shit to talk besides the fact that they blow their accounts and do a bunch of resets when people aren't looking. Mike said, it shows you don't need to trade every day and have many trades. Yeah. Yeah, exactly. The gods didn't when I did. So you show. That's what it is. Yeah. Pacific. Yeah, exactly. I completely agree with those statements, Tony. Matter of fact, I think wrestling might be a little bit more real than most of these people on social media. Just across the board, let alone traders. These so-called mentors that can't even go live. You know, if you don't show a track record, which I've also shown now, right? For like 4 straight months, I showed the performance in the Top Step account, me passing a Top Step account with my private group. I showed that here on YouTube. So not only have I shown proof of consistency when it comes to technicals for 7, almost 8 months straight live here, but for 3+ more years in my private group. But now I've also shown something that I wasn't really ever going to show, which is the analytics, right? The account balance and you know, passing a funded account and just profits, you know, because once you start showing that, people start demanding it, and then it builds a false expectation. You know, just because I can do something after almost like 6 years of trading every single day studying, doesn't mean that someone that's here for a year, 2, maybe even 3, but they kind of half-assed it, doesn't mean that they're going to be able to do it just because I'm teaching them. You know, there's still a good amount of work. That's why I make you work for the executions. That's why I make you think about what I'm seeing, and I point stuff out and I make you watch it, and I don't put too much emotional charge behind, oh, I think it's going to go, and make you get all excited. That's why I don't do that, because the focus is what am I looking at in the chart? And how can you take that information and apply it? So tomorrow, if I'm not on, you could still remember what to do. You know, that only comes from someone that teaches in that way, or the way ICT teaches. You know, because he's also one that doesn't do a lot of that flashy stuff. You know, but then when people spend time with him, just like when people spend time here, you start to see like, holy crap, there's stuff that I can use here that's better than almost everybody. You know, it's more consistent than almost everybody. You know, I mean, for 4.5 months, I was hitting at 88% strike rate in my Top Step account that I passed for my private group. And I showed it. I showed it continuously what the accuracy was. And then every Sunday, like I said, if you go back and watch, every Sunday we've been correct as far as where price is going to go on the higher time frame. So you couple the 88% execution rate, which I proved through Top Step's dashboard, Okay, so how am I going to fake that? You take that and you mix it with every Sunday, including this Sunday, and right now what's happening, like all of the forecasting coming to fruition. And I mean, you quickly start to see that not many people do what we do. Okay? And I do it live. There's nothing to hide. I put myself out there every day with my private group, and I put myself out here every day, or every Sunday, and live trade on Tuesdays for you guys here on YouTube. Right? So there's no getting away from any of this. There's no way of faking it. I don't use MT4. Okay, I use Trade-of-8 through funded accounts, or I use AMP futures, with a real account. You can't fake it. And I can't even show my broker statements with AMP because they'll email me. Just like they've emailed like multiple people that, multiples of my friends that trade through AMP too. And same with ICT's son. He showed his statement and AMP quickly told him to take it away because they don't like that. They're really low key. But they're one of, at least in my opinion, one of the best brokers. That's my opinion. You may have a different scenario. I don't encourage you to use any specific brokers, but I've had a good experience, and a lot of my friends have too. So you'll do what you will with that information. You can go try them out, see what's good. But yeah, you see this Kraken correlation. If DXY was raging higher, I'd be more confident to try to catch a continuation. Going lower, right? Like this in here, right? Low, high, lower, low, overlapping fair value gap. It's a rolling balance price range. Also an order block. So that was a chance I was considering, but I just decided, nah. I'm comfortable with just letting this mature a little bit and then possibly come back tomorrow maybe. Or if something happens in the next 15 minutes that entices me to do something, I'll consider. But yeah, for now, again, I hope you guys have learned a good amount from today. You've now seen yet again our Sunday calls come to life. You've seen real-time navigation, being able to call both sides of the market. I called a buy here and a sell, right? Or multiple sells, right? So I gave you multiple chances to try to think about trying to participate. But again, I'm not in here trying to get you in trades. I'm not a financial advisor. But hopefully you guys are learning stuff that is building confidence in you, so then you can eventually be able to walk on your own. And again, if you guys have any friends that you think can benefit from this style of teaching, if you have anyone that is struggling, that wants to be around a community and a person that's willing to help them, definitely send them a link to our lives and, get them involved, because I'm here to help. I don't care about fame. I don't care about having a name. I don't really care about none of that. I want to help people that are struggling because I didn't have any help until I paid thousands of dollars to people to help me. ICT for one, and then one of his other students named Joe Miller also, which was the most expensive I ever paid for mentorship in my career so far. So yeah. So 2 people are responsible for me as a trader. And then a lot of friends too, that helped me along the way. But yeah, hopefully I can be that resource to a lot of you. Yeah, what a delivery from that breaker, right? That was pretty exaggerated. I didn't really feel like it was going to be too open. I thought it was just going to slowly grind, but eventually get to it. The new week opening gap, but man, it opened up pretty significantly off of this. I really don't like the correlation. It's kind of nasty. It's definitely positively correlating with the overall indices, and it is definitely supporting the breaker I highlighted earlier on that higher time frame, the 30-minute. See how that's beautifully respected the midpoint? Overall, I said it would end up being bullish if we were to get above these levels. It never did that. And then all the different things that we talked about that would support price to the downside, everything has pretty much held up, right? Given the fact that it's kind of accelerated a little bit more than I expected, Although it's still going in my direction, it is kind of a bummer that I didn't get in that secondary entry. This one right here that I highlighted, that I just mentioned, because this would have been the area that I would have thought of another entry. I thought about it. I'm like, nah, I'll wait. And then it really delivered. But the context with this larger view, this larger swing in here, right, the higher time frame breaker, clearly that was absolutely influential and influenced this huge run. So this was where it started. And again, this just shows why you don't have to worry about missing a move. You know, all this happened before the real move took place. You know, we're now coming back to the first presented fair value gap from yesterday. Well, that's one thing I didn't highlight this morning, huh? Let's go see where that's at. Let's go see where the first presented fair value gap was. 630. Oh, yeah, it was pretty much right in there. I'll keep that right there. Yeah, do you guys kind of see how Power 3 played a role today, right? Like we mentioned it earlier as well, as it was just dancing around the open price. But you see how important Power 3 is, right? It hung around and then got below, and the best shorts came from above the open price. Literally like right above it. Right, you see that? And price broke down there, created the breaker I pointed out. Beautiful delivery. So realistically, you know, if one of you guys did participate in this and we're holding price, I mean, the move that I called, the initial area in here, this first breaker I pointed to that was going to target the low here, it offered not only 20 to 30, but it also, you know, if you caught something trading into this, I mean, that offered over almost 200 points. And, you know, we got ahead of and called an execution near the high of that overall price swing. You know, so this is the type of stuff that we get in front of, right? And of course, it kind of went beyond the 650 macro. We're in the 751 right now. I wouldn't be surprised if this gives a rejection and tries to come and clean up some of this buy side, some of the gaps up there. Like this one here. It's at a first presented fair value gap. DXY is now declining. Still lethargic, right? I'm sure a lot of people just got pulled into shorts throughout this drop. The only way that I would look to possibly participate, if I was going to, I would need to see price give at least somewhat of a retracement to a logical PD array up here. And then try to set up a move for a continuation variation of either the YouTube model, a breaker again, like I did up here, like I pointed out, or some type of inversion. Like if it runs up here, all right, like it's above this, trades into this, there's a fair value gap up there. If it was to use that and then displace and turn this to an inversion, that could be a possible area I would take to continue, but we're pretty overextended, so my risk would automatically be cut in half. Because of the conditions this morning, how we were in consolidation, how correlation was a bit off, it was already at half risk, even if I was to execute one of these up here, or any of these opportunities I shared. But now that it's opened up, maybe that'll set the tone for the rest of the week. But whether I took something up here or if I take one, or was to take one down here, it would still be at half risk because of the overextended nature so far, and then also the consolidated effect from earlier. So yeah, hopefully you guys learned a lot today. This will be the last macro that we look at, and whatever happens through this macro, 750 macro, it's going to be the last potential idea, whether this is going to reject and run up here. I think it has a chance to do so. Like if it overlaps this and then comes back and uses it as support, it may be used to try to come back up and sweep out some of this. Because think, if the session was to end, or the AM session was to end here, this delivery would come off of the low here, and because it has to close the body of the candle, right, for the downtrend, or the down candle on the day for the daily range. So this is a lot of the times what it does when it's going to close out a range for like a daily or weekly candle. But yeah, now we've closed above this, so this now, unless it gets traded back below, should be a launching pad to continue to push a little bit higher, at least in the form of a short retracement. In this case, this type of scenario, we have a opposing PD array too, and we're getting a pretty solid reaction here. So in this scenario, this should be able to hold to get us up there, and 20 to 30 points would be non-negotiable. You know, you don't look for 100, 200, too many large range moves when you're catching a counter trend move. You submit to 20 to 30 if you get offered that. If you get 20, take it, you get out. Okay, you don't force 30 or more in a counter trend move, especially when there's this type of delivery. You know, it could still look to want to like smash. You know, look at the huge delivery. You know, it's very, very volatile. One huge move here down, another one all the way back to a premium, right? A breaker, the wick, fair value gap on the daily, or the volume imbalance. And now we've got a huge rejection from that. And then it's also a 30-minute breaker, right? Higher time frame levels create large moves, and you see that manifesting here, right? So yeah, hopefully that stuff makes sense. Yeah, if we look at some of these other time frames, let's move up a little bit. I do like this here. If it can trade up into that, that'd be kind of nice. We do have a fair value gap in here. And if it looks to blow that out, that is very, very a very strong indication that we are definitely going to complete this as a market maker sell model. Right. I wouldn't be surprised though if, again, this huge run here ends up closing with a retracement, trying to get us up into this level. If you think market maker sell model, you got consolidation, accumulation, reaccumulation, smart money reversal. So I would say that price is going to have to stay below this to continue to keep that market maker sell model framework alive. With DXY doing this though, that's a bit concerning if this wants to continue and just keep tanking. But yeah, we'll see. DXY is an absolute mess. Look at what it looks like. That is so nasty. Nasty. Got this fair value gap in there. So we'll see what price wants to do with that. But yeah. 8-hour fair value gap. Go to the 1 minute real quick. I could have swore that line was red on the other time frame. That was weird. That was weird. But you see how it's respecting this fair value gap? This one that it overlapped? If it's going to continue to go higher and give us a stronger push through, that's going to be able to hold as an inversion. All right, it's got moved lower, overlapped it, now we traded into it. Price pushing away from it to the buy side supports this as a reversal. Reversal to what? To another PD array on a time frame that's above this one, right? What PD array could that be? It could be the 50-minute fair value gap. Got a fair value gap in here too. Got a high, low. If it gets above this high, it should be able to respect this down delivery if it's going to continue. Look at that. Yeah, it's like we talk about what price is going to do, and then it just manifests and does it. It's amazing. It's like a crystal ball. Oh yeah, yeah. Remember we talked about when we first looked at the chart this morning. We saw that Trump spoke around like 5 o'clock. I didn't even get a chance to see it. It wasn't on the schedule when I looked at it yesterday. But yeah, it came out. I don't know. Is he talking right now? I don't know. A lot of the time when Trump spoke this year, the charts just exploded. I mean, it declined first, but then power three for the year. So technically, it was just he was just used to manipulate. And the market does what the hell the market wants to do, and it recovered all the way. So I wouldn't be surprised if a similar thing takes place in here, but we'll see. We'll see what happens. Whether it goes up or down, it doesn't matter. Let it do whatever it wants to do. We'll still be able to identify what it's doing. And then when we can't, we just do what we always do. We just wait. I was saying it's possible. Yeah, we did say basically what's taking place was possible on Sunday. Yeah, I don't know what it is. I think it was Trump. Something that Trump said. It's probably being used as manipulation. Mind you, things have already been looked at as a possible down delivery towards that weekly fair value gap. So all of this is confirming that that's potentially still in play, and it's getting more and more of a strong confirmation that we are in fact going to have a pretty solid decline, especially with the COT delivery off the offloading of buy positions we've been talking about. I mean, that just manifested so beautifully. So for anyone that thinks COT and seasonality is useless, you are a fool, because I literally just proved you wrong, real time, right? For like over the last couple weeks, and it's just the people that teach it are idiots. The way I teach is very simple, and it's to the point. I don't need to sound smart, I let my chart do the talking, and it speaks pretty loudly if you pay attention. So yeah, here is the delivery in here. I think it still has a little ways to go. Again, if it breaks through that may offer another run lower to use this as a rejection or a overlapping fair value gap, right? Turn it to an inversion. We're inside the 750 macro, so again, we'll see. It's been very bearish, so I wouldn't be surprised if this current macro tries to present us with a run opposed to what's taken place. I would not be surprised, but if it does continue, we have somewhat of a framework in here too. So we got run on stops in here, swing low here, swing low here. So if it breaks down, that's run on stops, shift in market structure. We have that higher time frame PD array, and we can use this as a possible inversion. Again, your expectation shouldn't be too crazy because it's already ran over 200 points almost, or yeah, pretty much over 200 points for the whole range so far. So the risk of it giving a retracement just to come and sweep up a little further liquidity to the buy side is pretty high. But of course, it could still just melt, right? So until it proves that it wants to continue to dig deeper, which it kind of did here, but it's kind of went against that, stopped. Until it gives a little bit more evidence, like maybe another displacement through this high, we'll just continue to see this stuff as continued sells, that just keep pushing price lower. So let's see what happens here with this fair value gap. Ooh, look at that. Very nice. Fair value gap, overlapping fair value gap. Let's see, is it going to hold that? It's trading into the... Let's see, I figured it still had a little ways to go. But then I thought I may have placed it wrong because it was so close, but I guess not. I guess it was actually ready to get up there. You see how this is still supporting price? The fair value gap I pointed out. I said if it was to break down below that, use it as a resistance level, that would be a trigger for us to be ready to go lower. It never did that. So there was no chance to try to take a short. So now we're trading into this and we'll see what happens. We're inside the macro. So again, like I said, the macro, let's see, where's the macro from earlier? So I want you to pay close attention to what I'm about to show you right now, okay? So, I got my webcam in the way, can't see. Okay, so 650 to 710 macros here. Notice how 650 to 710 macro started the move, and now 750 to 810 seems to be capping the move. So from macro to macro, there was a lion's portion of the move in the middle of those two macros, which these are my two favorite macros, by the way, because this happens all the time in terms of timing. But you see the start of the macro, or start of the move started in this first macro at 650 to 710. And now once we got into this 750 to 810, it's now given the cap of that delivery. So if you're inside of an opportunity up here, this is a concept you can use to hold price and determine when you want to get out. If you're not going to use liquidity, if you're going to use time-based targeting, okay, or time-based exits, okay. This is something most people don't teach at all. I don't think I've heard this spoke on once. ICT's hinted to it, but most people, there's nobody I've seen on social media that teach the time-based theory when it comes to exits. You know, I don't think I've seen anyone. If you guys have heard somebody teaching what I just, you know, pointed out to you, let me know.
I didn't get that.
Oh, Siri, what the fuck? That was creepy as fuck. Yo, Siri, shut the fuck up.
Okay.
She said okay. What the fuck? Dude, that was creepy. Holy crap. Oh, that was crazy. Oh man, that was a little concerning, dude. Oh man. She's always listening. I need to turn that off. That was creepy, dude. Did y'all hear that? Fucking Siri's out here playing. That was creepy, dude. Oh my goodness. See, Siri even recognizes the gems. She's like, hey, you're saying too much. Oh man, that was something else. Yeah, she's like, hey, you're exposing too much. Chill out, bro. You said too much. Oh man, hilarious. Yeah, Mike, look at, you know, one of my most diligent students. Look at that, another 30 points. It's just non-stop, bro. If you point out what I mentioned about this giving that reversal, the run higher here, the buy that I pointed out ahead of time, and the two breakers, and if you were able to identify this one too that I mentioned a little bit later, one that I was going to consider but I hesitated and didn't do it. You know, it's what, 1, 2, 3, 4 with this larger breaker, 5, 6 executions that were basically right in the chart, you know. So yeah, it was a lot. And if you didn't take a trade and you've just been listening and following along, that's better than you thinking about taking a trade, because now you had the ability to focus entirely on what I've been saying. So now this stuff's going to stick. It's going to stay in your mind, hopefully. And if not, you could just obviously rewind to this whatever time it is in the video. How long have you been live? I haven't even looked. 2 hours and 2 minutes. Not bad. But yeah. So we talked about a lot of stuff today. Let's definitely watch what this is going to do. We're still inside the macro. Looks like the macro has again delivered the reversal portion between those two. The 650 to 710, 750 to 810. Basically, the whole entire delivery took place to the downside up until it went from macro to macro, right? One macro started the move, the other macro capped the move. Okay, and everything in between, it offered a bunch of different opportunities in there, like I mentioned. I don't know one model. I didn't know one model can give you so many opportunities, just patience away. Yeah, and then of course, Mike, it's also knowing what you're looking for. You know, most people think of models in terms of one execution. Okay, there's one execution per day, right? Because I'm looking for one model, right? That's the thought process people have when they hear people say, "Oh, you only need one model." They think, "Okay, well, how is that enough?" It's enough because they're happening over and over and over, right? You just have to know what you're looking for, and you have to be in line with the higher time frame narrative. If you're not, of course, it's not going to work, because you'll catch a bearish breaker in a bullish trend and get clapped, you know, and you'll try to do it again and then get steamrolled again, you know, or you'll try to force it when the model's not there, and then you'll get hit again, you know, and then it just continues. But there's so many opportunities for every single model. They're happening over and over and over and over. There's a initial model that sets up the biggest portion of the move, but then there's also smaller, more continuation focused pieces to the models as well when you drop down to the lower time frame. This is kind of like the benefit to having the seconds charts, or being comfortable with the 1 minute, right? Because if you find a move on, say, like the 5 minute, which I recommend you frame things out on a higher time frame, like I did with this breaker here, right? This larger one, because that's where the bigger moves are going to take place. But within that framework, or that, you know, that structure of delivery, you're able to then find other moves inside of it, like these here. Or once the bigger time frame PD array delivers, or bigger time frame setup delivers, you could then try to catch a continuation variation with the confirmation that that initial move took place on the higher time frame, right? That builds confidence behind being able to take these continuations, right? This right here is an opportunity I call an algorithmic rebalance. It's, well, not I call it, it's what ICT calls it. When it's really close to a PD, or like a liquidity pool or a PD array you're using to target, and price doesn't do an entire delivery. It's a balanced price range, right? Same with the institutional order flow entry drill. It's heavily dependent on balanced price ranges, right? Within the context of what you're looking at when we're close to a PD array. So that's another continuation model that I don't really teach, right? But I talk about it here and there. But yeah, that's another, that's why I was going to consider taking this, but I just didn't. But yeah, you know, so you have one initial model that you could frame from a higher time frame. And then as you're watching that unfold, if you don't take the execution right when the higher time frame one is met, you could still catch the moves happening later on if you go to the lower time frames. Right? If you go to the 15-second chart, right? Let's go down here and see. A lot of you guys are probably not going to use the seconds charts, and there's nothing wrong with that. It just means that you're not going to be able to catch certain opportunities, which is fine. You know, the only reason I use the seconds chart now, which I didn't do it in the past, because I couldn't couple them together. I kept getting confused. But as I gained more experience and I became more sharp as a trader, and I got more organized and understanding, you know, what it is that I'm doing, and how each time frame works within each other, I've, you know, been able to then transition to the seconds chart, right? But if you don't trade the seconds chart, who cares? The same thing applies on the 1 minute, right? Say you're trying to find a setup on the 15 minute, right? You're framing out the setup, right? Where's the PD array that's going to deliver your move, right? You frame it out, it runs up to the 15-minute PD array and starts the delivery. If you miss that 15-minute setup, you can move to the 5. If you miss it on the 5, go find one on the 1 minute, right? But all of that's in the context of the higher time frame framework, okay? Whether that's a 15-minute framework that's working within the daily time frame framework, right? Like say the run lower here had a daily fair value gap up here, okay? And it reached into it and started delivering. But then within that delivery from that daily fair value gap, you were able to then identify this as a bearish breaker on the 15-minute, right? So if you miss the daily setup, right, and you drop down to like the 15, you could find the 15-minute setup, right? But if you miss the 15-minute setup, you could then drop down to the 1 minute or 5 minute and find the 5 minute or 1 minute setup. And if you miss those, within the context of the daily framework that I just pointed out, you could then go to the 30-second or the 15-second and find an opportunity within the context of the higher time frame. Does that make sense? It's like I don't even know what you can call it. It's like time frame layering, right? Or some say top-down analysis, right? Which I guess it's kind of the same, but I like to. It's layering PD arrays, layering context, right? Layering contextual ideas from time frame to time frame, but all working within that one larger time frame perspective, right? I hope that is clear to understand, because just thinking about it, I can just see that it's a pretty complex idea. Mike, it makes sense? Okay, good. I mean, you can imagine how that takes time to learn, right? How it takes some getting used to if you've never looked at things that way, especially when you're looking to add on continuations, and then let alone being able to trust this real time. You know what I mean? And hopefully, me showing you that process live every day, at least I know for a lot of you it's helped, and I hope that a lot of you guys that may be new, I hope it helps you as well. Just got to keep showing up. And you'll have no choice but to improve. You know what I mean? So, and again, if you guys get value from the content, don't forget to like the video, subscribe to the channel. I hope you guys have learned a lot today. Thank you guys for hopping on. If you guys got any questions, let me know. And if not, since we're going into the lunch hour, right, or approaching it in the next 15 minutes, I guess we will call it a day today. So yeah, let me know in the chat if you guys have any last minute questions. We've called out 6 executions today, real time, ahead of time. I personally allowed price to run, and I did not take an execution. I could have, right, given the fact that I pointed out 6 opportunities. But I'm not in a rush. I chose to let today print so then I can come back and use the intel tomorrow. Yeah. So yeah, if you guys have no other questions, again, thank you for hopping on. I appreciate the support. Again, I hope you guys have learned a lot today, and we'll continue to learn as we get deeper and deeper into these amazing concepts. Again, if you guys have any difficulties, any questions, anything that is of concern in your trading, let me know in my DM on Instagram. Those of you that are in my private group, which some of you guys that are on the live right now are, just let me know if you have any questions. I may be able to hop on live today. I just have to go spend time with my daughter today. So when I'm done with her, when I come back, I should be able to be free and hop on some stuff, or hop on a call with you if you need it. Or we can do it another day, right? And for those of you in my private group, as always, we'll be live again tomorrow, same time. No news tomorrow, so low probability view automatically. Yeah, we'll see if there's something we can engage. All right, so yeah, thank you guys again for all the support. Thanks for hopping on. Hope you learned something. God bless each and every one of you, and I will see those of you in my private group tomorrow, and you guys here on YouTube maybe tomorrow in the free Discord with some markups. If not, we'll be live again on Sunday as always, ready to crush the market as we always do. All right. Yeah, with that being said, take care, you guys. Have a good rest of your day. Don't do anything dumb. Okay. And I'll talk to you all tomorrow.